Is.
And good morning. It is 25 minutes after 8 o'clock, and joining us in studio this morning from Loan Depot, Eliot Rodriguez back with us. Morning.
Good morning. Good morning, Roswell.
How are you today?
Doing great.
Good deal.
It's a nice little weekend. We got a little water on there.
It was nice. Got a little moisture here, and got good chances today and tomorrow. So, knock on wood there. Hopefully, we get some fruits from that
We'll
later.
definitely take this home.
Yeah, we'll take all the moisture we need at all. So,
it's like we get teased all the time. He just comes through and go.
That's right.
He doesn't want to come down.
Well, we got a little yesterday. Hopefully, we got some more coming.
Yes.
So we'll see. Of course, now's an interesting time to buy a house, isn't it? It's kind of with inflation and, of course, the Feds with the interest rate last week and what they're doing to try to curb inflation.
Correct.
What's if you're looking for is it still an okay time to be shopping, or you're like, you know what, can you hunker down for a little bit, or what's kind of the mindset right now for people looking to buying whether it's their first home or their fifth home,
Well, in my opinion, you still have to live somewhere.
Sure.
Okay. As far as what the Feds did, which is what you and I were talking about, last month.
Yeah, we knew it was
about
coming.
Yeah, about basis points.
It's a matter of time, yeah.
Well, the thing is this: you cannot just let's make it very simple. You cannot just push it so hard, and so high, like we were at 6.5. Okay, and a lot of people don't understand, and that's what we were talking about: basis points. Okay, I mean, how much it costs them doing, a loan and so on, buying points and getting a better interest rate, all that kind of stuff. So, if you look at it this way, it's very straightforward, and this is the best way I can explain it for the folks out there so they understand what's happening.
Sure.
Okay. So what we were talking about is that the market was, so resilient, and it's not stopping it. It's going to continue, and everything keeps going up, and everybody keeps talking about the rates going up. Well, the rates never truly went up in the sense of the interest rate itself. It was the cost.
It was just supply and demand was driving up that cost.
So the cost is making it up. So, In layman's terms, it's simple. So let's say we go back 3 years ago. Okay, if you were doing 3.5%, 4.5%, 4%, or something lower, okay, you maybe were buying some points and it wasn't costing as much.
Gotcha.
Okay, so for example, like a $200,000 home, maybe it cost you $1,500 or so, extra to keep it under the 4% or so. Okay, that's the best way I can explain it.
Gotcha.
Now, if we were right now, you couldn't do that. Period. First of all, because the Feds control how much a person can buy in points.
Right.
That controls the people that are rich out there, so they can, they don't get to do whatever the heck they want to.
Sure.
Okay. Second, it protects you as a consumer, so the lenders don't just charge you whatever we want.
It does try to level the playing.
It levels
field
the plane
to keep basically the little guy in the game if he wants.
So if you move that from then forward to now, instead of being 3.5 or 4%, okay. We were at 6.5. The bad part of everything keeps going up, and the Feds and everybody didn't want to release the ceiling and go higher,
right.
So it costs less. All right, so what was happening is maybe a 6.5 or even 5.5 or whatever the situation will be, depending on the product, on whatever you are doing as a consumer. It was costing not just like $1,500; it was costing like $6,000 depending on the loan.
Gotcha.
Okay, and the amount of the loan and so on. So what does that mean? Well, the higher it keeps going, it's still the highest interest rate you're gonna get, but
Sure.
you can go higher on interest rate, but you go higher on cost, which that makes it difficult for some folks, because eventually would it come to a point that you cannot do a loan, because if it's gonna cost X amount of money to do a loan, like closing cost points and so on.
Sure.
Eventually, you will not be able to buy a house because it's costing you too much, and the Feds will not allow me as a lender charge you too much, because then the loan don't work.
Sure.
So
you're basically paying something for something that's way over what the actual value of what that product is.
Exactly. So basically, what they have to do eventually, that we were talking about basis points, getting a better deal, buying points down, they have to release the ceiling so the costs become lower.
Gotcha.
So according to their statistics, they're supposed to have gave the country a 2% breathing room as far as like costs and so on, but we'll see how that goes.
Sure.
The rates were going up and down, and last week we actually went down a lot. Like, there were days that more than 50 basis points in the positive for us as consumers. Okay, but they already raised it to 7.5 maximum. I mean, actually 7%. I'm sorry,
Gotcha.
7% ceiling as far as interest rate. Okay, so the individuals, depending on the products, depending on if it's the first time, depending if it's conventional FHA or VA, depending on what the program is, it's going to determine what the interest rate you are and how much you're going to really pay for it. And there's some breaks here and there. So it made it better for the consumer to be able to obtain homes and not so difficult and lose the room. To be able to acquire a house.
Sure, but really, when you look at it now, so if you're one that's looking to buy a home now, it's probably behoove you to look into those programs we talk about. If you're a veteran, if you're a teacher, if
you
you're
need to take advantage of
first responder or something like that, you're really going to find a bigger benefit in those programs right now than you would, when the interest rates were sitting at like 4%.
I know, you and I were talking all the time about like, take advantage of this, buy a house now.
Yeah.
That has not changed. If you're going to buy a house, if you're ready.
Because those things can take away things like your down payment.
Exactly.
Or what the actual percentage, like it'll cap what they can put a percentage rate on. Or, like you said, the big one is no down payment, especially for some of those VA loans. Because atypically, your first home and everything, they're going to want at least 10% down. And that might be higher than that.
Depending.
Of the cost of that house. So if you buy a $100,000 house, you got to walk in there with a check for $10,000.
Well, we were
at closing.
We were worried about that. Because if they were not going to release the ceiling, in other words, truly raise the interest rate, so the points to be able to buy a house cost less.
Sure.
Okay. We were started to think, where are we going with this? We're going to start like, we're not going to be able to. We're going to have to try to help some people, give them some kind of lender credit, and eventually wouldn't be able to, because it would cost way too much to be able to, purchase that home. And I was waiting for that because, we talk about this all this time. I had a 90.5 interest rate. I talked to some folks, and they
and back in the day, you were like, "That was amazing. I love that rate."
That was still nice. I talked to some folks that are like, "Oh, I had a 15, percent interest rate on my house. You still had it nice. It's like, I did."
Well, and I got to be honest. Now I'm sitting in a situation where, like, because I refied a couple years ago,
you see, nice.
Back when, and I think I'm at like 3.9 or something like that right now. And now you look at where's it 7 or whatever it's at right now?
7 is the highest.
7 is the highest. So you could get a little better than that, but still, that's probably average person's probably paying 6 to 5.5, 6 right now.
There may be some lenders out there that can maybe go higher than that, but that's all kinds of different loans and all kinds of different lending.
Just depending on
what they doing, because but by the feds and just going by the normal rules that we're supposed to go by, yes.
So from my perspective, my house payment is actually paying for my house right now, and we're
I guess you could look at it that way.
Because I have a much lower percentage rate of it going towards interest.
That is true.
It's going towards the principal of the house, and obviously, and we've talked about this before about ways to pay down the loan faster and all that. It's all great stuff that you can do because in essence you're building collateral and equity into yourself by doing it. And to be honest, once you get your first home in and we're talking these percentage rates and things, now that down payment and all that, it turns out you're building equity on this, whatever house this is. So the idea is when you're ready to move on to your next house, you've got 10, 20, 30, 50 grand, maybe more in equity into this house. In essence, that's your down payment on your next house. And more, hopefully, depending on how much equity you got there. But in essence, that's why it's a lot easier once you're in the game to get that next house or do, or basically like we talk about, and Eliot mentions here every time. You're a first-time home buyer, first house. You ain't buying Taj Mahal the first house out.
You may get lucky a little closer.
Yeah, that's just not going to happen. Your first home. And generally speaking, we're younger at a different phase in our life. We got the world in front of us. You're ready to maybe put a little sweat equity into that. So the first house you buy might, it's not going to be your dream home. It's going to meet the needs of you and your spouse, maybe the first child. So you've got a 2-bedroom or 3-bedroom that's kind of small, older, probably had to do a little bit upkeep and things like that. But at some point you outgrow that, or you're like, you know what, I want something that's got a little bit more modern stylings and things like that. And so then you upgrade to the next one. And that's really how homeownership works in America for most people.
And if you think about it, I mean, let's be realistic in what's happening right now. I mean, rent is to the roof. Okay. And guys, that's not stopping.
You're paying for someone else's retirement by doing
and that's
that.
not stopping.
Yeah.
It's just going to continue going up.
Sure.
Because the demand is there, and there's not enough, inventory in the market. Let's be realistic.
Well, and this is part where we get back to that other thing, and this is where Eliot really helps families, especially first-time buyers, this is why we need you to be proactive and smart with your finances, because no matter how much money you make or how much money you don't make, if you are smart with that money,
you could do anything.
You can do anything. And I'm talking, how many instances where you have people that literally work what we call the menial, the bare minimum wage jobs.
Yeah.
They work 40-hour weeks.
In McDonald's, Burger King, you name it. There's nothing wrong with those places.
If you are smart with that money, you can still buy your house and everything else. Now, obviously, you might have to be a little bit more extreme with your
how you spend your money.
But it's absolutely there if you're disciplined enough or have the, and that's all about setting goals. And so if you set that goal, it's like, I want this house. All right, how do I do it at my current spot? And Ellie can really sit down with you and go over those numbers and say, this is how this is what it's going to take to get in that house. And now more than ever, you really need to mind. When interest rates are 4%, that gives you a lot more wiggle room to do that. But now that we're talking 6-7% interest rates here, that's your mortgage is going to be a couple $100 more a month. It's just going to be.
And believe it or not, sometimes it's not as bad. Okay.
Yeah.
So I mean, you have to think outside the box a little, be a little more smart than the average person that don't even give no thought to really figure out, like, should I buy a house or not?
Right.
I mean, I talked to how many people I come across that they're buying their first home and they've been renting for like 20, 30 years and they now decided to buy a home.
If you get to the process, you're probably going to find out it's cheaper.
Yeah.
Because in essence, when you rent a property, you're paying whatever that guy's mortgage is on top of whatever more they can get for it.
And that's true.
And so, let's face it, if you're paying $1,200 a month in rental in a lease, that guy's probably paying $800-900 a month on a mortgage on that.
If not
house.
less.
Yeah.
You never know.
And so, why give him that extra $300 a month where you could just buy a house just like it and you're paying $800 a month mortgage instead of $1,200 lease? Oh, by the way, that $800 mortgage is going back into you building collateral. Where's that lease going? Into the other guy's pocket.
Yeah,
you got a roof over your head, but you're investing in his future, not your own.
It's time to start investing in ourselves.
Exactly.
Okay? I mean, on yourself and your family.
Yeah.
Because let's be realistic, and they say the only thing, for sure in life, is debt and taxes.
Yeah.
Okay. I think sometimes they need to kind of change that phrase to debt and taxes, bills, and some things because they don't stop; they keep coming.
Sure.
But the fact is still the same. Don't be afraid of buying a house, okay? Because the rates have gone up. That doesn't mean nothing because if your lender is smart, okay, and I have to say it like that because sometimes I question some of my peers. But anyway, if you think outside the box, okay, and you allow that individual to, and they do a good job, figure it out, okay, to push you in a real good spot, it don't matter what the interest rates are right now because let's be realistic. You'll refinance later, okay? Bring it down. Don't stop yourself because of the interest rate are higher and you're going to pay an extra $50 or $100 more than what you maybe wanted to before.
Sure.
Eventually, the market's going to go down a little and change the numbers, and we will be, refinancing again. I mean, if I just tell everybody out there, go and do a search in Google and see, and go 30 years or even farther if you want to.
Sure.
And just check for interest rates on home. See what the trend was from all the way there to today.
Sure.
Okay. If you don't want to go crazy, try to figure out a bunch of stuff. That's the easiest thing you can ever do.
Well, things are reciprocal.
Exactly.
What goes around comes around.
Exactly. So my point is, when I used to talk about my interest rate being 9.5 for my home in Colorado Springs 15 years, 12 years ago plus. Okay.
And you're bragging on it.
And I'm bragging on it right now. I was like happy. I got a real nice home. Then I took, because I was not 100% in the business just yet. I started then,
Sure.
So
you knew enough to be a little dangerous.
Yeah,
at that
I was
point.
dangerous.
Yeah.
I was able to buy a rental. I do this and that, and I wasn't putting too much mind into like how much interest rate.
Sure.
If I
Plus,
would have,
you were younger and more
aggressive.
Aggressive. Absolutely.
Mm-hmm.
Yeah.
So if you guys do it, if you do yourself one favor, is go and check, see what the history or interest rate on homes were from, I don't know, go 15, 20, 30 years, and you see what I'm talking about. When people talk to me and tell me 15 and higher, it's like, what? I was like, I thought I had it higher, but I never took a moment to go and check.
Sure.
So, but after I did, it's like, wow. So all we're doing right now, literally, okay, is setting up a new trend for years to come. Okay. I was never 100% like super, concentrated into like refis. I just do refis as it comes, the opportunity comes to help people.
Sure.
And depending on the situation. I know a lot of lenders were like, aggressive as crazy when the rates were real low, okay? Because, it was all about the bottom line,
Sure.
But what happened to be able to do that, it was that the rates were a little higher before. So now was the chance to
Absolutely
help people. Guess what's happening? All we're going to do is set up a trend for maybe 1 or 2 or 3 years from now, okay, for refis.
Yeah.
All over again, okay?
Yeah, because when the economy gets better and things, the interest rate will come back down. And those people paying 7% can now get it
6.5 or 5, whatever it might be.
Yeah, can now get it a point or more lower.
I always
down the road,
I always recommend at least 1 point.
Yeah.
Okay. If you're doing half a point, it needs to make sense because remember, we have to give a benefit to the individual to be able to refinance. Now,
Sure.
if you got divorced, unfortunately, or you sold a few properties,
A life thing happens.
or a life thing happened, and you need to change some stuff or take some equity out, whatever, because you need to fix. That's different, But there has to be a benefit for the individual for us to be able to do a loan, But it's coming.
Yeah.
So we're just gonna set a trend for the next 6 months, a year or two, depending on how they.
So really, if you find the house that you love right now,
don't be afraid.
Buy it, pull the trigger on it, and then maybe here in 2 years you might want to come back to Eliot and say, "Hey, interest rates are down. Let's refi and save you a few $100 a month on this thing." And now you're putting more equity back into your home.
Depending on circumstances, because I've done this a lot. We always thinking maybe $100 or $200. So I seen the situations when the PMI is gone, and you didn't pay that much PMI. It's just the house is worth so much more money now after 1, 2 years or so.
Sure.
So like exactly the same is still happening right now. People still refinancing, okay? Because now they have enough equity.
Yeah.
Okay. Now they can get rid of the PMI. All right. And for all those folks out there that don't know what PMI is, that's private mortgage insurance that the lenders have in your home if your home doesn't have low. It's actually, let me rephrase this so everybody understands it better. If you bought a home and you didn't put 20% down on it, okay, and you didn't do a conventional loan, you probably are paying PMI.
Okay.
If your home is worth, okay, more than what you purchased it before, and your balance on the loan is a little less, and you just have to be just 0.001 less than 80% of what the home is value, okay, you can get rid of your PMI. Okay?
Gotcha.
Even that sometimes, even at this interest rate right now, it's a good reason to even refinance if you wanted to. Okay. But if it's not worth it, obviously we don't need to do it. But the point still stands. You have the power to do that when you get to those points. And then figure it out later. And put you in a better position. I say people $400 and $500, sometimes even more. Monthly.
Sure.
That's just crazy. And
that's where you like to really shine and sit with the customers because if someone comes in with you and said, "Hey, I want to refi today," Eliot's going to look through your stuff and he'll be honest with you. If he's looking at the numbers, I got to be honest. This is not the smart move for you right now.
Yeah, we maybe have to wait. You know what I mean, maybe wait another year or 6 months.
Rather than get your business on something you really don't need, he's going to be honest and say, "Let's do this, and then come see me in 6 months, and then we'll talk about it," or whatever it is. But that's where Eliot. But if you're going in saying, "I want to refi," he's going to run the numbers and be like, "You know what? Smart move, dude. This is the time to do it in your situation."
Because it doesn't matter what's happening. My sister called me the other day. So she's in Florida. everybody wants to go to Florida. I think everybody forget that it's very humid and have a lot of bugs over there. So they forget about
but
that.
They like the freedom to do what they want, I guess. So they'll pay for a little humidity.
So she was asking me, when's the best time? What do you think about the raves up in Florida? My answer was, well, first of all, I don't know much about Florida because I don't live there.
I know it's hot.
But I can go and do the the search and give you some kind of somewhat educated answer for that.
Sure.
And she was asking me when's the best time to buy. I tell her, well, you should have bought a house a long time ago. Okay.
About 4 years ago.
I mean, through me or through whoever, I don't
Sure.
care. The point is, you should buy a house. If you have the ability to buy a home and own your own house, and you're renting, and you're afraid of taking
You're handcuffing yourself.
You're just holding yourself back.
Sure.
You shouldn't. Okay, buy a house. Be part. This is the way I look at it. Be part of what makes this country move forward.
Sure.
Okay, and I'm not saying the people that rent out there are not doing that. What I'm saying is, but make it to be part of something that is benefiting you 100%.
Every time you rent, you're investing in someone else's dream.
Mm-hmm, and that's a fact.
And
I used to rent houses out.
Start investing in your own dream and take that money you're paying for rent and let's convert it into a mortgage, and you're buying and investing into your own self and your family.
Exactly.
And that's, at the end of the day, that's the American dream, and that's how we all end up, getting our piece of the pie. And it starts with home ownership. That's
Exactly.
just, in the United States of America, that is the
dream,
the springboard to success.
And if you want to put a white picket fence and get yourself a dog, there you go.
Absolutely.
So the answer to my sister is the time to buy a home is right now.
Yeah.
Okay. There's a lot of trends out there that you can check. When is the best time to buy a home? Like when they talk about in the spring, the summer. But it depends. Okay?
Sure.
Every situation is totally different.
You if you can afford less home than you really want right now, that's okay. Just be smart. Because at the end of the day, if you just pick a home that's gonna guarantee to increase in value, then you're okay.
Correct.
The only problem, and 9 times out of 10 you're okay. I mean, there's always a few lemon houses out there
that's why you should do an inspection.
and that's where you got to, that's when you choose a real estate agent that's going to look out for you and all that stuff. That's that world.
Yeah, I always tell my customers, nothing against the folks out there selling their own homes and all that kind of stuff. I done it myself.
Yeah.
Nah, but I'm a little different. I mean, I've been doing this for 25 years for myself, and I've been in real estate for that long.
Yeah.
When I was not licensed, when I was doing it on my own, I mean, I learned the hard way.
Sure.
I went and put into it, and some people even back then was like, "Hey, Eliot, should we do this? Should we do that?" It's like, don't do that. I don't even know how I was reading it, but I was reading it right.
Sure.
Because my old boss, hey, let's do this. I got a guy that invests. You could do a second, this and that. And what they forgot to tell their the people was that it was the wrong investment at that time.
Sure.
I saw it like it was a big
It just made sense
sign
to
that
you.
That don't make sense. Making a $2,000 or $3,000 or $5,000 extra profit to put yourself in a bad position.
It sounded
is not
too good
worth
to be
it.
true.
Exactly, and I didn't do it.
And that's the true in anything in life, as it real estate or anything else. If it sounds too good to be true,
You have to be careful.
it probably is. Do your homework, do your research. If there's it's just, in real estate, just like anything else. If you look at a property or something and it's valued way under what it should be in your head, why? There's a reason.
And dude, that was before.
Are you willing to accept that?
That was before I even got into mortgage.
Yeah.
That was before I was even a banker.
Yeah.
Okay. And I saw those things and I read it like it was a big, one of those billboards. It's like, yes, but you shouldn't do it because of this.
Yeah.
And I don't know.
And that's usually
funny.
that difference between taking a loss on a house and breaking even or earning a collateral.
They had to do some short sales, dude.
Yeah.
Oh, it was ugly.
Yeah.
And my wife always remind me about that. Like, you were so smart about doing that. It's like, I didn't know what the heck. I just didn't like it.
And this is kind of like back, 10 years ago with these adjustable rate mortgages and the trouble people got in those things. It's all about, the move may work today, but you got to think of a couple moves ahead there. And generally, most instances when you're talking about buying and selling real estate, you never look at it as this is the end. You know what I mean? I mean, if you're like, this is my last house I'm ever going to own and all that, one thing, but if you're in your 20s, 30s, 40s, probably even 50s.
You know how many times I say that, dude? And I just bought another house afterwards.
Exactly. So, yeah, maybe the last one until something else comes across. But my point is, if you keep making the smart plays by not buying things that aren't right in your head, and that's what it is. If you're like because in the real estate world we fall in love with one aspect of the home, and then we're like, yeah, but it's got that cool fireplace. Yeah, but it's got this, and this, and we're going to spend so much money fixing this. You know what? Maybe we need to sacrifice and get a more stout house, and that doesn't have as cool fireplace as we want. But I mean, we as humans tend to do that.
Yeah.
And you get and don't chase those dreams, because if you chase them, it's going to bite you in the tail, and that's what happens in real estate.
Let me share something, and folks that are listening out there, okay? When you see that house that you won, I mean, that's cool, okay? If your lender, me or whoever, I don't care who it is, okay, telling you you're not ready, I need you to do this, don't rush.
Right.
Okay? You need to do a few extra steps. But the house that I wanted, is like, I get it. Okay. The fact is, there's another house even better than that down the corner.
Yeah.
Don't do that to yourself. All right. First of all, you're gonna drive your real estate agent crazy. All right. Because these people are gonna be showing you 20 million houses.
Sure.
And you're gonna be, but I want that one. And
Yeah.
but you can't. Okay.
Yeah.
Don't do that to yourself.
Yeah.
All right.
There's always more.
I always say that you're not buying the Taj Mahal and that there's no such a thing as the perfect home. Yes, when you look at it, you're hoping that that's the perfect home. You're going to make it a perfect home later.
Yeah, you're going to put your
own personal touch,
your
into
stamp
it.
on it. Yeah.
And don't do that to yourself. If a home that you were so set into your mind to buy, there might be another one on the next street or whatever.
Sure.
Don't do that to yourself, because if you can't buy it, don't be upset with yourself and just take a breather. Take
Absolutely.
a second, because you may end up finding yourself that you made a better decision by going to the next home.
Sure.
And it happens, okay? But if your lender's telling you you're not ready, you need to do this first before you do that. Don't do an offer on a home if you're not pre-approved.
Right.
For God's sake, don't do that.
Because you're setting yourself up for failure.
You're
you're making promises your butt can't cash.
I mean, let me put it like this. Let me knock on wood, because I've been making some magic for some people that done that. It makes it more stressful for the real estate and, even for yourself.
Sure.
Okay? Because now you're under contract, and now the lender has to, what is that? Pull a Jordan and just make a dump.
Sure.
Like make the 3 points.
But you also handcuff yourself on maybe taking advantage of some opportunities and things, because
Exactly.
now you've just limited the options to this.
Exactly.
And your agent or your mortgage broker could easily said, yeah, that's one way to do it, or we could have done this and I could have saved you about $10,000.
Exactly. You just hit it on the nail on the spot. And let me tell you something. I had a few deals. Okay, talk to your lender when you're going to make an offer on a home before you make an offer without asking. It's a good idea. I recommend it 100%. Okay, because you want to put yourself in a good position. Because you could buy a house, doesn't mean you just go blind and just don't think about what offer you're making.
Sure.
Calculate the numbers real good so it'll help you in the end. Okay?
Absolutely.
Trust me, that seller wants to sell the house. That's the whole point they put it on the market.
Yeah.
If you go and make the right offer, okay, and make a good negotiation that makes sense for everybody,
sure,
okay, and you guys are good to each other, you're gonna, hit a home run every single time.
Absolutely. And your smart financial savviness, like you being good with your money and being, I'm not saying frugal, but frugal to a point, being, yeah, we can spend our money and we live our life and have fun. But if you're smart with your money,
yep,
it turns out you're going to be in the driver's seat in every one of these conversations. This is like, you see those jokes on TV when someone walks into like a mortgage place or a car dealership and they get an 800 credit score and they kick back on the chairs and take a plant and all that kind of, I mean, it's not to that extreme. But when your financial your affairs are in order, you walk into the room, you lead the conversation because you're coveted, you're in desire, and you can walk at a moment's notice and get what you want because you have proven to the world that you know what you're doing. And you don't have to say one word, but your credit score and the fact that they open your portfolio and say this person has got their ducks in a row, instantly they're like, okay, we can't. the huckster talk goes away. You know what I mean? It's
Yeah.
like you can't. They're linking. Oh, well, this person got bad credit. I can get a couple grand out of them here. You know what I mean?
That's true.
And that all goes away because they're saying this person is on top of their game, and that's where Eliot wants to put you in that part. So when you walk in the room, you're making the calls and you've got the choices and of what's best for your family versus the person trying to sell you the property.
There you go. That's a good point.
Yeah.
I seen this scenario wrong so many times.
Yeah.
I'm approved in such and such. I went, Rocket Mortgage or something like that, whatever.
Mm-hmm.
Okay. And I did it, an online thing. They approved me. It's like, do you talk to somebody? Have anybody go through everything? Have you been interviewed? And like, interview about what? I'm getting a job?
Yeah.
Like, buying a house is like getting a job.
Sure.
You kind of get.
You have to prove to the world that you're good for it. Yeah.
I get both sides of the quarter on that. Sometimes people are approved and it seems to be okay.
Sure.
But sometimes they're approved but they're not okay.
Sure.
It means they didn't told them in the story of the application that there are other factors in their life that stops that the outcome of what this is going to take.
Yeah.
Real. Me, I'll look at everything, and even I in interviews, overlook one thing, but I double check everything afterwards. And whoa, hold on a second, that 275 is really now 260 or 250. Hold on, because you didn't tell me these. We overlooked this.
Well, and that's just if you get pre-approved at an X amount of number, that doesn't mean that's your number.
Exactly.
If anything, you should look for houses below that number. That way, you got wiggle room. You've got chances to, if like Eliot said, something unexpected comes up that got you some playroom versus you going for your ceiling, and now you have no wiggle room, no room to breathe, and this deal better go perfect or it's going to fall through.
And I get that, guys.
Yeah.
You approve to this much. You know what the funniest thing? Every time an agent or somebody calls me, all right, so that's the maximum they can get approved? Like, yes, I give them a pre-approval on everything, and they come back with a higher price. I just told you that was the max.
Right.
And they keep pushing and pushing. It's like, and
I get it. You want a cooler house?
I get that,
But you're gonna have to. Let's do this first, and then let's, in a few years, once you're established and got more equity and things, then we'll go for that house. Mm-hmm. But it's the ladder. It's the chain. It's we start out in the shanty, and then we just keep building up, and then hopefully by the time you're more established in your life, you've got the solid 4-bedroom, nice neighborhood home, and then at some point it starts going the other way because the kids move out and everything else, and you go from the big 4 or 5-bedroom home to like the condo 2-bedroom condo jobber, and that's life generally, how it goes, and that's kind of, and I'm not saying every person's like that, but atypically that's kind of the evolution of home ownership in the United States of America.
Well, like I answered to my sister, like when you and I talked all the time. A lot of people ask me, when is the best time to buy a home? Well, what is the best interest? Who gives me the best deal? Okay, you know what? You have to be careful with that. Okay, but at the same time, if you qualify, if you are ready to buy a house, that is when you're ready to buy a house.
Exactly.
You can't just think about the market or what's happening because then you'll never buy a house.
Sure.
Okay?
You'll be waiting.
Exactly. I'm going to do the best I can and push you in the right position and explain new things to you so you understand better what you need to do.
Sure.
And at least don't put yourself in a bad place. The point is, in the end of the day, if you are ready to buy a home, the time to buy a home is now.
Sure.
It don't matter what's happening in the market. If you do that and you start talking about who does this, who does that, you will never buy a home.
Sure.
Okay? And you just basically shoot yourself in the foot.
Yeah, you'll be sitting out at the pool to keep dipping a toe in and waiting for the water to be perfect to jump in.
How many people didn't buy houses, when they was 3.5% or 4%? How come?
Yeah.
Because they were still saying the same thing.
Couldn't afford it.
I don't know if I should, and here we're looking where we are now.
Yeah. I just saw the time. We're out of it. It is 9:00 here, but I want to tell everybody, if you're wanting to have this conversation, get a hold of Eliot with Loan Depot. He's starting to put roots down. He's got an office here. It's not quite ready yet, but he's still kind of mobile for the time being. But give him a couple weeks here, and he'll get, as soon as he puts some paint and some carpet in, he'll get the office all snazzed up here. But reach out to him direct by his cell 719-237-4680. Again, that's 719-237-4680. You can still call the office number, and they'll get you to them. 505-445-2070. Again, 505-445-2070. You can also email Eliot at erodriguez@loanedepot.com.
No, Eliot Rodriguez.
Oh, it's all full out Eliot. I'm sorry. My eyes need to be thicker. It's E. Rodriguez was the old one. Eliot Rodriguez at loanedepot.com. Or go to loanedepot.com/Eliot Rodriguez, and you can check out his website, too. loanedepot.com/Eliot Rodriguez.
Yeah, go in there, check it out, so you can see what we're doing.
Yeah.
You know, I mean, it's all there.
And then, like I said, reach out, have a call, and tell him your situation, and have a conversation about what he can do for you today.
Yeah, look me up on Facebook, and you see what we do. You know,
Absolutely.
I post everything in there, so people can see it and know what's happening.
He's like a lot of folks in the real estate in that industry. He's a lot of times working evenings, nights, because that's when you're off work. So he'll
catching up everything I
that's right. So if it's after hours and things, he'll come to you and all. He'll take care of all that stuff. So thank you, sir, as always. Appreciate it. The visit. We'll see you here next time.
Thank you for having me.
Let's see what craziness in the world happens between now and next month that we're talking about here, and see who's falling off bikes and all that good stuff. So. Thanks, Eliot.
Thank you.
It's 9:01. You're listening to 106.